Really impressive set of results for a company that does still rely on China, and yet the numbers pretty strong out of LVMH.
That's right, and despite the pressure on margins with the strong, of course, inflation environment, we're seeing another strong set of earnings for LVMH, which is a kind of a bellwether for the luxury industry. You've got plus 19% in organic revenues for the fashion and leathers division. That, of course, includes Louis Vuitton, but also Christian Dior or Marc Jacobs or Fendi. Plus 30%, that's really outperforming a unit for the wines and spirits division, because people continue to indulge with Hennessy Cognac or Dom Perignon Champagne, and plus 20% for the watches and jewelry division. That, of course, includes Tiffany that they bought a couple of years ago for $16 billion. So despite the inflation environment, despite the raw materials prices increases, it seems there is still this strong appetite for luxury goods. And of course, LVMH still has a very strong pricing power. Of course, a few challenges ahead, as you were mentioning. Even though Europe and the US have been driving this growth, Asia has been suffering due to the lockdowns in China that we saw during the second quarter. And of course, some analysts, including Goldman, are actually saying that the traffic to Chinese stores remains difficult, and that online is not compensating enough in China for LVMH. Also, LVMH has to deal with the exchange rates environment, with the yen and the euro very low against the dollar. It's become cheaper for Americans to buy luxury goods and LVMH products in Europe, and that's creating a gray market. So that's something that luxury brands, including LVMH, of course, really do not like. So LVMH will have to deal with these geographical distortions. And finally, about the longer-term recession risks, you heard Bernard Arnault telling me last month that this recession risk, he remains optimistic, but last night in the statement, they said they have to remain very vigilant about the second half.